Thank you for coming to ResiDay 2025. We're about to do a virtual interview with Opendoor's new CEO, Kaz. He recently came in and replaced Carrie Wheeler, the outgoing CEO of Opendoor. They just had earnings yesterday and reported some, new directions for the company. And so we would love to get his thoughts on, where he wants to take Opendoor in 2026 and beyond. Can you hear me?
I can.
Awesome. Thank you for making the time to chat with us.
My pleasure. I'm sorry I couldn't be there in person. We had earnings yesterday.
All good. Really appreciate making the time. And so looking ahead for 2026, why don't you go ahead and just give me your new announcements that you had at earnings in terms of strategy yesterday?
Yeah, look, I think in many ways, Opendoor over the last couple of years has kind of thought of itself as like an SFR investor in some ways, like a hedge fund just happens to own real estate. And its job has been to buy homes at very large spreads and then hold on to them and sell them slowly with no particular rush in order to make money from home price appreciation. Right? That's been kind of like, I don't think it's an unfair analysis of the company's history over the last at least couple of quarters. This just is an exceptionally bad idea for a tech company because tech companies aren't hedge funds. We're not PE funds. Our job isn't to be good at that. And I think the new Opendoor is much more similar in its look and feel to a market maker, right? Where our job is to have very tight spreads, but very high number of transactions. And this is what we spent most of yesterday talking about the products we are building to allow us to have very tight spreads, very high transaction volumes, and how we can become a larger percentage of the overall real estate market.
And so is that really, kind of doubling down on iBuying, or are you kind of considering using your scale and your size and all of this understanding of the housing market and connections you build to kind of start to, move into other avenues with your business?
Yes and yes. So look, I think the company needs, our job at Opendoor is simple. We're here to tilt the world in favor of homeowners and folks working hard to become homeowners. In order to do that, we'll have to have lots of different products live. And I think the traditional question to Opendoor has been, hey, will you go down this capital heavy model or will you have a capital light model? How will you engage in a transaction? And I think that's actually an okay question to ask, but it's not how we think of it. Look, I think the best companies in the world, the best software companies in the world don't tend to think of their capital structure, but they tend to think of what the user wants. Like, what is the thing that solves the problem for the user most easily? And the answer for that at Opendoor will be a variety of products. I think our traditional cash product works really well for people who want to sell all of their home quickly. We'll have Cash Plus, which is a product that allows us to, not have to agree with the seller on the final price of their home, but provide some liquidity up front. And we'll have lots of other products along the way that will be, there are two axes, right? Ownership and risk. And we'll want to have products along the entire spectrum. And the thing that matters to us a lot is to have lots of transactions happen on Opendoor so we can provide other services and other value-added products to buyers and sellers, whether that's title and escrow, insurance, warranty, mortgage, or a bunch of other things that we're working on. The plan is to have incredibly tight spread on the actual transactions so we can provide value on additional services.
And so how can you make money with this model in an environment where transactions are so constrained and then appreciation, is pretty close to flat nationally, and in some of the markets you're in, down a little bit?
Yeah. Look, I think it's a very real thing. Look, Opendoor is less than 1% of U.S. real estate transactions today. So, 99% to go. So we're not suffering from lack of transactions happening. Now, do I wish there were more transactions? Sure, but I'm not hoping and praying for a macro recovery. There's plenty of transactions happening for Opendoor to have a great business, and Opendoor needs to be a great business in any macro. Second, I think if you rely on house price appreciation, or if you try to, build a business assuming that is true, you just will not end up building a business that solves a problem we want to solve. I think you can build a great business, just not the one that we want to build, right? Our job is to have incredibly low days in possession for each home we buy. And that means we'll just be exposed to macro less and less and less over time. And so if you buy a home and you're going to hold it for a year because you were surprised by what you bought, or you have to do significant number of renovations, or you just want to have it sit on your balance sheet, you care a lot about what is happening to the price of the home, right? Home price appreciation ends up mattering a lot. But if you intend to hold each asset for a very short amount of time, then you're exposed to that less, and you can spend your time worrying about additional services you can provide to each user. Look, there are lots of instances where it makes a great deal of sense for us to buy a home where we intend to make $0.00 on the home acquisition and disposition itself, right? We have a very successful and very improving title and escrow business. We will have a great mortgage product, great insurance products. So I don't think we need to necessarily have a very high margins on each transaction.
And so looking ahead to 2026, or maybe even to 2027, what's kind of like your take on the housing market and where you see things headed next year?
I mean, look, I think there's let me just broadly answer the question, but specifically avoid it, because I don't think tech companies should be in the business of trying to predict the future of the economy. Like, software companies are notoriously shit at this problem. We're bad at this. Like, there are lots of people in the room who are better than we are at predicting the future of the macro and future of the housing market, like the price of a home. But specifically, I think anytime we reduce the friction on a thing, the amount of that thing that happens goes up. I came to Opendoor from Shopify. There's a very, very famous story where lots of very, very smart people thought that if Shopify captured 100% of e-commerce, it would capture only about 50,000 merchants. Shopify now has millions of merchants. And I think a significant amount of real estate transactions don't happen because of transaction friction and transaction costs, right? If you buy a home today and want to move tomorrow, you probably can't, because the transaction cost itself will prohibit you, right? That's just so people end up being locked into homes they don't love because their transaction prices are too high, or the mortgage rate they came in with and the one they're leaving with is difficult. That actually locks people in to a world where they don't really love their home. And I can tell you, that's a problem we're going to be very good at solving. Like, we already launched something a few weeks ago. It's live in Texas, where you can buy an Opendoor home, move into it 7 days early, and if you don't like it, you can return it with zero cost. I am telling you that will increase the number of transactions that happen on Opendoor, because we have reduced the cognitive distance required to pick a home. So I think we are going to be successful in increasing the number of transactions, and I think we need to be agnostic to whether housing prices go up or down, although I hope that more people can afford to buy homes.
And do you think that assumable mortgages, I believe you've done something with Rome, do you think that could help unlock some transactions at the margin and improve affordability at the margin?
Yeah, not even at the margin. I think they can unlock lots of transactions throughout. Look, I think we announced this yesterday. We've launched on Rome, where we're able to actually help sellers get into Rome's network so that more assumable mortgages become available. I think this is a wonderful thing for the world. People should not live in homes they don't love just because they're locked in, and should be able to take the upside from the mortgage rates they have. But I think that actually, that's going to be significantly important, but other things are also going to be important, right? I think what the federal government is doing in terms of, what the Trump administration is doing in terms of trying to actually get Fannie and Freddie to be more aware of the market, to issue more mortgages, buy more loans is going to help. I think some of the work we're doing is going to help. I think it's very odd that you have this stack where in the course of every housing transaction, there are literally dozens of human beings that touch the file. I think reducing that will also help. So I think this is going to take lots of concentrated effort by lots of folks. But from best I can tell, things are going in the right direction.
And so somebody with like a tech background like yourself, Shopify, what is kind of like your take looking outside of your business and just looking at real estate at large? Like, where do you see innovation coming in the sector?
I think we're gonna have innovation across the entire stack. I generally am I'm very bullish about this. Look, I grew up as in a home full of folks that were in real estate and PropTech. My dad was a builder. My brother was a PropTech investor. But I grew up as a nerd, right? I grew up coding on my Commodore 64 when I was 6. So I've been around the space for a while and have a deep appreciation for it and understand why things that involve atoms move more slowly than things that involve electrons. Having said that, I do think we're at a place where a lot of things are getting easier. And you are seeing significant innovation, though these are relatively small still, but all important things start small. I think some of the work being done on real world asset tokenization is going to have a real impact on the ability of the average person to buy a home. I think a lot of work is being done in by traditional builders is going to significantly increase the number of homes being built because they're leaning into using all the data on their servers to be better at their job. I think a lot of work we're doing in terms of using the machine learning models we have built to value the home to predict days in possession, days on market, and also to use those same models to underwrite the risk of a mortgage or insurance. I think those are going to have real impact on the world. So I think this is actually a particularly interesting problem where housing and auto have been basically the last two markets to be touched by tech, but you're now seeing real progress in both. I think the work Carvana is doing in this space is genuinely inspiring, where they're using a combination of great software and great operational rigor to make the process of buying a car more joyful. And I think we're going to do some of the same.
And so the past several months, you've gotten a lot of buzz at Opendoor, the company. You have whatever you want to call it, meme stock or cult stock or whatever the phrase is. There's a lot of buzz online and a lot of interest from investors and a lot of these retail investors who are kind of optimistic about Opendoor as like long-term in terms of the stock and the things that Opendoor could potentially get into. With that buzz, that asset of just that earned media and just that buzz out there, how can you take that and use that to power growth? How can you kind of like grab that energy or the buzz?
Look, I genuinely love our average shareholders. Let me tell you why. Because in the history of the United States, whenever fancy people are on one side and the average American is on the other side, the average American tends to win. The average American tends to be right because the collective wisdom of the average American tends to be right. Now, I think what is happening is our average shareholder is looking at what's happening in real estate and saying, hey, how is it possible in a world where everything is becoming easier, this transaction is becoming more difficult? Like, that just doesn't make any sense. That's not right. Someone should fix this. And they have trusted us to fix this problem. And we are deeply aware of that trust and the work we have to do to live up to it. I genuinely, this is a very real thing. I don't have Yahoo Finance installed on my laptop. I don't track the price of the stock on a day-to-day basis because I've never spent a day of my life working on Wall Street. And I'm a highly undiversified human being. Like before I started this job, I literally owned only one stock, and that was Shopify. Before Shopify, I only owned one stock, and that was Meta, back on Facebook. I tend to be a non-diversified investor. So I can't tell you what the price of the stock is today. I just can't. I generally don't know. But I can tell you this, that I spend a lot of my time looking at the real metrics that matter for the business. How many homes we're buying, how fast we're turning them, what does our balance sheet look like, what is the velocity of our product launches, what does our funnel look like, and the real metrics that affect the business, I'm very bullish about.
And so what would you say to kind of like some of the more bearish concerns with the business model of iBuying? So I was talking to the CEO of CoStar, Andy, back in 2022, and I asked him, because at the time Redfin was exiting iBuying, and iBuying was kind of in some trouble with the mortgage rate shock. And I asked him, was he happy that he didn't get into iBuying? And he said that he was dumb, but he wasn't that dumb to get into iBuying. And he kind of went on and gave his view of the business model. What is kind of like your take in terms of like, what do you think people kind of get wrong with the model, and why do you think there's still opportunity for it in this type of environment?
Yeah, I mean, I think it's actually one of those odd things that success in any business model is relatively path dependent. If you look at the first 7 or 8 attempts to create a marketplace on the internet for e-commerce, they basically all failed. And then eBay and Amazon became competitors and built businesses on the back of this thing. Like, people overestimate the ability of there's a pretense of knowledge thing that happens that Hayek talks about. Human beings tend to overestimate how good they are at predicting the future world based on what they can put in an Excel sheet. Like, this is a very real thing. I think lots of very smart people spend lots of their time fooling themselves into being able to predict outcomes by typing things into Excel sheets. These are the same people. On the day I started at Shopify, 2 short sellers wrote reports saying Shopify's business was going to go to zero. The day I became the COO of Shopify, 2 of the smartest analysts in Wall Street wrote reports saying Shopify will never be profitable, and the other one wrote that profitability would be out at least till 2025. Shopify became profitable, I think, 2 quarters later, and I've hit the rule of 40 ever since. You absolutely cannot, no matter how hard you try, predict the future of a business in an Excel sheet. It's just not how it works. As a guy who's been involved in building a few businesses, the way you actually do this is by building products that people want, and it becomes very path dependent. No one, anyone who tells you they would have predicted Amazon would become Amazon is just absolutely lying to you. Because, very famously, the guy who used to run D.E. Shaw told Jeff Bezos Amazon wasn't going to work. So, I am dumber, I guess, than the former CEO of CoStar, but I like my chances.
And so for those of us who are not necessarily in your tech world, more the normies like myself that are outside of that world, with like everything that's coming along with like AI, what do you kind of see coming these next few years that's already like in the development, and how do you think that could disrupt real estate?
So let me give a very easy example. When I arrived at Opendoor, and I don't think Opendoor was that unusual in this space, between the time someone said they want to sell us their house and we put an offer on that house, there were 11 people who touched that file, like up to 11 people who touched the file. That number in most of our flows is down to 1 person now. So, that's an order of magnitude improvement in our cost structure in just that one flow. And I have done back testing of the data, and we're making better decisions. So I think there's going to be a significant change in how the businesses or these businesses are going to be run, just simply because machines are better at picking up patterns than human beings. Like machines are not limited by 10 fingers and eyes, and can do better work on asset pricing, on figuring out patterns. Like our models have gone significantly better over the last 9 weeks. They were relatively good to start off with. So I think the answer to your question is I think it will look nothing like it does today in 5 years from now. But folks won't really, these changes tend to happen slowly than all at once. So we're now in the slowly phase of this. But those of us on the inside here can tell you that the process by which we buy homes looks nothing like it did 10 weeks ago. And I'm telling you 10 weeks from now will look nothing like it does today. So we are in a stage of change in a way I haven't really seen in tech since the iPhone first came out. I think we are in as big a stage of change in terms of what the world will look like now as we are, as how iPhone changed the world.
Kaz, CEO of Opendoor, thank you so much for making the time to chat.